Hello and welcome to another update video about RUNE. The RUNE chart has moved further into the direction that we wanted it to move into. So it's moving higher from this larger trend reversal zone, support zone that I defined already months ago for this fourth wave pullback. The market has already recovered in a very, very choppy way. So it really hurts my eyes. Okay, so it's not impulsive to the upside, clearly not. But it doesn't have to be. It doesn't have to be. Please be aware that we are moving in this move to the upside in wave 5, which should reach, well, minimally, I'd say $8.64, possibly even higher, maybe around $10.80. That's all reasonable for this fifth wave. What I'm tracking is now some kind of a diagonal pattern. We will need to see if this is going to turn into something different, which diagonals tend to do, because you're dealing with corrective structures. Essentially, what I'm tracking is a 5-wave pattern, but it looks like a diagonal pattern. And this 5-wave pattern needs to unfold to confirm really that a low has been established in this fourth wave. It's currently what I'm leaning to, but as long as I have choppy price action in only 3 waves to the upside, it is easily possible that it dips down again and that we basically get back into the yellow support area again in a more complex, possibly WXY structure. And then in the Y wave, we started here on the 24th of December. This here would be an A wave down. This move up would be a B wave, and a C wave down is still to follow to complete wave Y of 4. What I will do here in this video, I will just move everything a little bit to the right, at least this yellow structure, just so that it becomes clear that this could still turn into another move to the downside. And I will explain to you why that is not unlikely. Again, it's not what I'm primarily leaning to, but I tell you when we have to potentially expect that. So let's zoom in. And you see that, nice movement from the low, exactly the 38.2 retracement. Very common target for a fourth wave, but the rally was only in 3 waves. So, you can count it as a 5-wave move, but then this would be the third wave. Questionable. Okay, very short. Okay, but even if it is a 5-wave move in wave 1, this definitely stopped here. It's just a complete mess, this move to the upside. There are a few ways how this move up can be counted. So I'm counting it as ABC in wave 1, then the wave 2, then this is a 3-wave move, again A wave in wave 3. This here would be a B wave pullback, very shallow though for a B wave, but sometimes they are. And then this C wave to the upside is a big mess. It looks like an ending diagonal. Okay, so that's one perspective. It just is a perspective that means we need to be on the side of caution. Not necessarily bearish it is, but it means that the wave counts, the microstructures could easily change, okay? And if we talk about this as a third wave, A wave completed, B wave, the C wave should reach ideally the 100% extension level of the A wave. And we talk about, if we just go by pip extensions, $6.51. That would be quite aggressive though. So it's also possible it might only reach the 61.8 extension. Here we talk about round about $5.90 because there is Fibonacci confluence at 590 with a 1.236 extension, which is my minimum target for a third wave. So there's good confluence between what could be a target for a C wave, but definitely the minimum target for wave 3. Alternative perspective would be that, let's finish that first. After the third wave is completed and the third wave needs to reach 594, it doesn't mean it will reach it, but it needs to keep the idea alive that we are here in a bullish breakout. If it doesn't even get there, then, we are likely in this Y wave. And then the ideal target would be actually $6.18. After wave 3 is completed, I can give you a support area for wave 4, and then we can calculate the target for wave 5. Another perspective would be that, this was wave 1 here indeed, but in a 5-wave move. You can count that as 5 waves, it's just not great. Then this would be a third wave to the upside, which would then also be an impulse. Again, also a bit questionable, but it could be that this was a 1, a 2, a 3, a 4. I think it was not too deep, so it's possible. And then just wave 5 is an ending diagonal. Okay, so that's possible as well. So wave 5 of 3, and then we would get a 4 and a 5. Does it change anything though? Not really. I rather prefer to show you the wave count that's a little bit less certain and creates a little bit more messiness so that it keeps us on our toes. It doesn't look clearly impulsive, but as I said, it could be that, yeah, I mean, this was a 1, 2, 3, 4, and the wave 5 is just an ending diagonal. Might be nearly done then. And yeah, again, the targets I gave you before, they are sort of still relevant, and it still stands that a third wave there needs to minimally reach 594, better $6.18. But nothing, I mean, it still means we only have 3 waves up. I still need that 4th and the 5th wave to keep going. And yeah, I mean, what is the relevant support now? I mean, when do we now get basically a warning that things are turning down? Well, it would be a break below this small wave 2 low there. So if we see a break below $5.11, then I would say something is changing at least, okay? And would need to reconsider what the chart is doing. It would get, at the moment, I would not call that a wave 3. Again, it could be, if it's a diagonal, an A wave of wave 3. It would not necessarily be bearish, okay? And overall, the orange support box is still relevant. Yeah, it's still relevant in case we come down again. Not bearish, just another pullback in an overall uptrend. But for now, as long as this $5.11 level is holding, I'm leaning towards higher prices. I'm following that white wave count. That's my update about Rune. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.